Hey everyone, welcome back to the channel. Today we're diving into one of the most powerful concepts in ICT trading, CISD, which stands for Change in the State of Delivery. This is a pattern that plays out over and over again in the markets, and once you understand how to identify it, you'll start to see it everywhere. So let's break it down step by step. So what actually is change in the state of delivery? By the way, I'm going to call this change in state because it's easier. Change in state of delivery is the last leg of manipulation before price distributes to the opposite draw. It occurs when a large and fast move manipulates liquidity, then distributes. Change in the state is used to tell when a reversal is about to happen. And change in the state is used to refine entries into trades to get precise and good trades, good risk trades. Note that a change in the state is only a change in the state if we have manipulated. And that is very important because you don't want to get caught up in a fake reversal. Alright, here's a bullish example. First, we see that price has manipulated sell-side liquidity, and this is what a visual change of the state looks like. So we see the last leg before we take liquidity. So come back up here. Change of the state is the last leg of manipulation before price distributes the opposite draw. So when we take this sell side, I'm looking for the last leg of the manipulation move to come take this low to get ran through. It's simple as that. You just draw a line where the last leg was. Price displaces and closes above, change the state, leading to a reversal. Alright, now here's a bearish example. So we can see that we have swept a higher time frame level, and this is the last leg. And now you can see price is distributed through it, and we end up getting a reversal to whatever sell side level that was desirable. You can see price runs through the last manipulation leg goes lower. Here's another example with a line chart. It's got manipulation, price comes up, last leg, maybe a rally gap in it, displace. Sometimes we also retrace the change in the state or come back to maybe a inverse rally gap that was in the range, and then we come up and continue lower. Alright, so there are two ways you can use change in the states for entries. So one is use it for confirmation for an entry, or use it for the entry itself. So here's the example for our entry. So price manipulates buy side liquidity. We have come up, and here's the last leg, the down close candle right here. Then price distributes, and here usually I take it as the entry down here after he's closed below it, and most likely we might stop to this high, or maybe this value gap right here. But in this case, this trader, or the example that I chose, you can actually wait for a retracement of the change of the state, which isn't always common. So we usually like to take trades after the candle is closed below it, or confirm that we are switching biases or a reversal. And yeah, we were chased to change the state. This is where you'd be using it for very precise entry. You would only use this if the change in the state was maybe less volatile, or you didn't get the displacement you wanted, so you wanted to see further confirmation. Here's it used for confirmation. So sweep sells liquidity. We've had to move lower. This is the last leg. As we can see, this bullish candle right here, last down candle until we take the low, and we see this inverse rally gap get ran through. And usually when we have an inverse rally gap, it means that we're not going to retrace, because coming back to this inverse rally gap before actually fully displacing that change of the state gives us a very high probability entry that we don't have to just wait till it comes back to the change of the state. So I would probably enter this candle after it closed, or midway through its span. But you can see that it doesn't end up retracing to it, just because this inverse rally gap just gave us that much juice to actually go to whatever draw, which is buys the liquidity. But yeah, so the narrative of that change in the state can just be ran through and never retrace to, or it can be retraced to and then go to the draw. But most of the time, obviously, as I explained, change in the state will most likely just get ran through instead of retracing. So traders enter when it closes above the change in the state. Alright, 4 key things I want to go through before hopping into the charts. Change in the states are only valid if manipulation has happened. They can be used as confirmation or an entry, but most of the time it's just going to be confirmation. They allow for high quality and precise entries with good risk, and they confirm that displacement is valid and that price is switching from bullish to bearish or bearish to bullish. Let's hop in the charts, boys. Alright, I'm going to show an example of a trade I took last Thursday. So basically, first, we are expecting the midpoint of this wick right here. This is called consequent encroachment. It's pretty, like, it sounds very touchy, but it's not. It's just the midpoint of a big wick. Pretty simple. But going into this day, we had manipulation of buy side, lots of liquidity below, in a daily value gap, which I didn't mark out. But this all ties into change of the state, by the way. So at open, we have a 15-minute rally gap that I want to see ran through. Alright. And then let's see what this does. So this is 9:14, so let me skip so market open. Alright. Market opens. Okay. And then we kind of run through this wick up and put in a SMT right here. Now, this isn't going to bring us to the total draw, I know, because we have the higher time frame is telling the narrative that we are bearish. And so this 15-minute has also gotten ran through because the 15-minute candle hasn't closed. So I want to take this trade going into that 15-minute candle closing. So, alright, I don't know why I deleted it. SMT, yeah, SMT, and I want to see this bring us up to possibly take buy side liquidity. So I see manipulation. I'm looking at this high right here. Let's see what happens. Price comes up, and look at chain in the states can also get respected too. So many people on this day took this trade right here, looking for a fast reversal, but the last down close candle of this little move right here, we hadn't manipulated. So first of all, it isn't a valid change of state. Many people were confused by that, and the candle didn't close below, so it got invalidated, and we respected it. And then price comes up. Still, I haven't seen a change in the state yet, but now we've manipulated this high. Put in another SMT. And actually, another SMT is very confusing, but it makes sense. So this is its own model, in a sense. But manipulation. Chain the state right here. This is the last down leg. This is the last leg of this move right here. After taking this high. SMT counts as manipulation. And I want to see this get close below. Bang. I put on shorts. I stop at this candle high. And I'm just targeting this low. And TP gets reached pretty quickly. So that's one example that I used it. Alright, I'm going to run through one more example, or two, let's go two. But this is a trade I took, I think, 2 weeks ago. It was a pretty big trade, but it clearly involves changes to state because that's why I took it. So on the higher time frame, you can see we have lots of liquidity stacked up here with a higher time frame SMT and manipulation higher time frame, and we've already been displacing. So when I zoom in, I see this 4-hour rally gap in the range of where open is. So also open, we see us respect this 4-hour rally gap and continue lower. And I wanted to see this sell side level get taken out open, and it did. I'll show you where market open was. It was right here. Market open right here. And then we kind of come hesitate, and then bam, sweep this low, put an SMT, and now here I still want to see price continue lower because so much liquidity that is close to each other. Very good low hanging fruit. And so now, after this low is taken, I want to see manipulation. So we come up, take this high, and I want to know if this high is the one that we want to manipulate before continuing. So this is where the change of the state comes into play. The change of the state will validate that that this is a reversal. Because if I'm going to draw out what the change of the state is, it's right here. It's very sly and slim, but it is there. And this is the last leg before we take this high. You can see it's a downward close candle right here. And so I wanted to see if this candle, this change of the state got ran through, because that would decipher if I actually took this trade or not. It ended up getting closed below, and I entered in short. Placed on top of this high, and you notice how I get really good risk with change of the state trades. Oh wait, no, I put it right here. At the candle, I usually do that. I get really good risk with these change of the state, just because if you always anticipate or wait till the close below, and you just set your high to maybe the rally up right here, you're always going to get good risk. But sometimes you won't. So, depends. But now I target this low, internal low first. Bang goes my TP, just let it ride, and then I target this low and set my stop to break even. Oh my gosh. And then TP. So, very good trade with, the change of the state, which is honestly the main player of this trade that helped me execute it. I'm going to run you guys through one more example, and then hopefully you understand more. Or since I've been only showing bearish examples, I'm going to show a bullish example. So this isn't a trade that I took, but it's also a really good example of change of the state. Alright, so this is a last example I'm going to be showing. It's a bullish example because I've been showing all bearish, but it's a really good example. So, as we can see in the higher time frame, we have buy side liquidity above, and then what I want to see with buy side liquidity above is I want to see internal manipulation of sell side to go further to the higher time frame draw. So, hold on. With this SMT in place, no bigger higher time frame rally gap. Also, I didn't take this trade. I'm just looking at the charts. Okay. Also, this is on the 1 hour. I'm showing this on the 1 hour because it still works in the 1 hour, and mostly swing traders would do that, but you could picture this as the 1 minute and it would still work. Like I would take this in the 1 minute. So we have SMT, no real for rally gap or PD array to the left of us. And then bam, there's change of the state right there. It lasts. Pardon me. Leg to manipulation. And then you just see displacement through it. We actually get really nice displacement through, so I wouldn't take this as an entry, more as just confirmation. And you could probably put your stop at this inverse rally gap and target this high. So you can get also just amazing risk with change of the state, which is the blessing about it. So key takeaways from this video: know that they are very important, and you can use these to refine your entries very sharp. They're used for sniper like entries, like always. They work in every time frame. And they can only be used when manipulation occurs. And it mostly use them as a confirmation for an entry, not an actual entry like a retracement. Just enter with them after price closes below or above them. So I hope you guys learned something in this video. Thank you for watching if you are watching to the end, and have a blessed day, bro.